how do you know whether to go long and short? So we've established where the market wants to trade, right? It wants to trade near areas of high volume. Now we look at the delta inside of key levels, right? So at your key levels, the market creates support or creates resistance. Now, this is the most important thing. We do not predict whether it's going to be a support or resistance based on candles, patterns, lines, indicators. We don't do that. We wait for price to come to those high volume areas, right? Those key levels, right? Those fair value gaps. And we look to see how the market reacts at those areas, and then we trade in line with the reaction. So to simplify that down, buyers have to be aggressive, buyers break, price breaks below the zone, aggressive buyers fail, so sellers are in control, right? Or vice versa, sellers are more aggressive, price breaks above the zone. When aggressive sellers fail, buyers are in control. Buyer and seller absorption creates support and resistance. So when buyers get absorbed, right, that means we're at a resistance. When sellers get absorbed, i.e. they don't win, buyers are in control. And that's the basics of key levels and order flow. So we're going to be giving another example. So this was the example from the 22nd of December. What we saw the previous week, again, high amounts of volume being transacted at this key level. So this is where the market is interested in trading. Notice how yes, there was movement over here. Not a huge amount of volume last week was traded here. So I'm not interested in this zone. I'm interested in this primary zone over here, 6900 to 6910. Roughly that sort of region, where or near the POC, the point of control. So fair value gap plus volume profile equals key level. Okay, so now we're going to be focusing on the right hand side. So what's going on inside of here to give the rejection? So yes, number one, we've tapped into the zone. Now zooming into the zone, do we break above or do we break